There is a massive misconception out there. Most people look at their investments just in US dollars. How much did my gold go up? How much did I buy it for? How much is it worth now? How much is my crypto portfolio now worth? How much is my stock portfolio worth? Or how much is my house worth? Now, the issue is that the US dollar is going down over time. And because of that, over time, all asset prices are going up. Now, because of that effect, it makes it very hard to distinguish what asset class is currently cheap. Should we rather buy houses? Should we rather buy stocks? Should we rather buy crypto? And what kind of assets are comparatively expensive? In this video, I want to share something that took me years to figure out. Because here's the conventional wisdom. This is the S&P 500, very long term, starting in the 19th century, and it's denominated in US dollars. And the reason to buy stocks in this example is because the S&P 500 over time goes up. The reason why some people do not buy stocks is because sometimes, this is now on a logarithmic scale, we do see crashes, right? We had our crash in the 1930s of more than 80%. We had the oil crisis in the 70s where the S&P 500 went down almost 50%. We also had just our recent quite significant corrections, right? The dot-com bubble burst, also almost 50%. And then over here, the global financial crisis, another 50% correction. So this is why a lot of beginners, quote unquote, don't invest. They are worried of losing their money. And the chart is pretty obvious, right? The chart shows us over time, the S&P 500 is going up, and so are all other asset classes. So if we just have a long enough time horizon, we can just buy into whatever asset is our favorite and then just wait it out. But here again lies the problem. A dollar today is not worth as much as a dollar, say, 30 years ago. And so even though we might get the same US dollars or even more US dollars in a few years from now if we buy the wrong asset at the wrong time, even though we might have a higher number in our bank account, that higher number might not be able to buy us more product. That's the problem. Now, here's the nice thing about those kinds of problems. The numbers are official. We can have a look at how many dollars are circulating, how much is the monetary base expanding over time. We can quantify all of those effects, and we can then say, does it really make sense to long-term, for example, buy stocks? Are currently stocks cheap or expensive? What about precious metals, etc.? We're going to look at all of this in this video. So again, this is the S&P 500 long-term on a logarithmic scale and here on a linear scale. The difference between those two scales.
To get the full-length video, feel free to simply subscribe over here. Then you get it recommended by the algorithm.